Good afternoon, everyone. Welcome to the Watchlist by Magenta Trade. Today is Monday, the 25th of July, and we are back with our regular YouTube live program, The Watchlist. At Magenta Trade, we teach you how to grow your portfolio using option trading strategies. In this program, The Watchlist, we help you navigate through the market by discussing news, views, and opinions along with the stock updates. We look for trading and investing opportunities using stocks and options based strategies. In our options trading masterclass program, we teach you how to grow your long term investment portfolio and to protect your capital from severe market downturns using different strategies based on stocks and options. If you are interested to know more, please visit our website www.magentatrade.com. You can also keep in touch with us by following us in the social media, Twitter, Facebook, and LinkedIn. And of course, while watching this program, please don't forget to subscribe to our YouTube channel. But let's first have a look at our disclosures. All our discussions at Magenta Trade are solely for educational and information purposes. We are not investment advisors, and you should consult a financial advisor before making any investments. Options trading involve exceptional gains, but at the same time, they pose inherent risk. Past results are no guarantee of future gains. For more disclosures, you can visit our website, www.magentatrade.com. Quickly, a couple of words about me. I'm Shan, joining you live here. I've been actively trading for more than 15 years in stocks, ETFs, futures, options, warrants, CFDs, and currencies. I've turned my personal trading experience and passion into professional coaching. And recently, we have formed the company Magenta Trade to share with you my strategies of success in trading using simple terms and techniques. My favorite areas of coaching are trade management and money management. At Magenta Trade, we base our strategies on three dimensions of investments: long-term capital growth, building a retirement portfolio over a long period of time, generating regular income using stocks and option trading strategies, and ensuring your capital is adequately protected against severe market downturns so that your hard-earned money is not wasted in adventure. Okay, let's jump onto the market to see what's happening. Actually, there's not much happening. S&P 500 is just 7 points down from Friday's close, so it's not going anywhere. Looks like it going somewhere, but at this moment, probably the market is, waiting just for directions from the different big tech companies, as well as the Federal Reserve interest rates. So that is the biggest, event that is going to happen this month, or you can say this week, which will give a clear direction to the market. Just from a technical point of view, to discuss, as we have been discussing for the last a few trading sessions, that the Bollinger Band on the S&P 500 has narrowed down, actually had narrowed down 5 trading days back, and now it is expanding. When it expands, the market or the index takes a clear direction in a particular, and it creates a momentum in that particular direction very strongly. That's what we have seen earlier, like in this case, when the band was narrow and then the market took a direction towards the downside and it fell sharply. So that is what we are again expecting now, either to fall sharply or to go up with a very high conviction. Now, market going up from here is a very slim possibility, because the interest rate is going to be hiked once again. It may be more or less, but surely. I was just watching the Bloomberg. 75 basis point is now just kind of an accepted change, or you can say hike. So anything more than that could be a higher shock. But even 75 basis point is not a small change. So definitely it won't allow the market to grow higher with that kind of rate hike. So I don't see any possibility of actually market flourishing a lot from this situation. The war is not going anywhere. The war is or will be there for another few months. Inflation is already high, and the supply chain bottlenecks in China and other places is still continuing. The demand in the market is falling for different products and the technology solutions as well. People are not buying that much in retail and other places. The travel sector is not really thriving because of number of challenges in the airline sector and the hotels and other places. So nothing is really in a very good shape, or can come up with a very big news in the market, so that the market will definitely go up. The investors are shying away from the market. This is in the middle of, you can say, the biggest sell-off in the market. As you can see, the stocks are down from their peak in January. Even the gold, silver, and other metals are not really thriving that much. Bitcoin is at a significantly low of almost 30% from its peak. So I don't see really a big upside. So then what can happen if the Bollinger Band is expanding from that side? The only, or you can say the most probable direction could be the downside. So that's what I'm looking at. So that is from the technical side. From the fundamental side or the market news, the biggest news for this week are going to come through a number of uh, earnings update in the stocks. So what we are looking for in this market, more than 900 companies are going to report their earnings. And we also have the Fed's highly anticipated July monetary policy meeting, which is going to happen on Tuesday and Wednesday. And we are going to get an update around 2 o'clock Eastern time on Wednesday. The CME FedWatch tool puts the probability of a 75 basis point rate hike at that meeting at close to 80%, with an 53% chance of a 50 basis rate hike at its next meeting in September as well. Okay, with several influential data points being released between now and the meeting on September 21st, what the Fed says in its policy statement this week, and what Fed Chair Powell says during his post-meeting presser will be examined closely. Before the Fed meets, we'll also get the final reading on the Personal Consumption Expenditure Index for the second quarter 2022. Given it's one of the Fed's preferred inflation benchmarks, we could see some fluctuation in CME FedWatch tool expectations late in the week as well. The second half of the week also brings the latest consumer price index data for the Eurozone, which has been struggling with energy and food prices because of the Russia-Ukraine war. That data will likely factor into the European Central Bank's approach towards further rate hikes. On the earnings side, 174 constituents of the S&P 500 are slated to report this week. In recent weeks, the expectation for EPS growth in the second half of 2022 has inched lower to 9% versus first half of 2022, but that still looks somewhat aggressive given the rising interest rate environment, slowing economy, dollar strength, and other headwinds. We expect to see more downside pressure to second half of 2022 earnings expectations, and exiting the week, we should have a much better idea what the second half of the year will look like for the earnings per share growth. So that's the update from the NASDAQ website. Let's see what are the changes that were, or you can say what are the earnings we are looking for. Today we have already reported one company, RPM, there, and I'll come to that in a few minutes. But other companies, notable companies that today we are expecting the earnings is NXP Semiconductor, Whirlpool. Then tomorrow we have got S&P Housing Price Index, New Home Sales June data, then Coca-Cola, General Motors, McDonald's, UPS, AMD, Alphabet, Chipotle, Mexican Grill, Microsoft, Mondelez International, and Visa. We have on 27th of July, as I mentioned, the Fed Reserve Monetary Policy Statement, China Industrial Profit for June, durable orders for June, retail inventories ex auto on June, pending home sales of and June data. In the earnings, we have Boeing, Hilton, Ford Motors, Meta Platforms, Qualcomm, and other companies. On 28th of July, Eurozone Business and Consumer Survey, Consumer Confidence, Consumer Inflation Expectations, US weekly initial and continuing jobless claims, and in terms of earnings reporting, we have MasterCard, Amazon, Apple, Intel, Yum China. On 29th of July, Friday, we have Eurozone CPI for July, personal consumption and spending for US, PCE price index for June, and Michigan Consumer Sentiment Index on for July. In earnings, we have on Friday, 29th of July, Caterpillar, ExxonMobil, and Procter and Gamble. Okay, so that's S&P 500 here in your screen. Let's jump on to one of our earnings reports quickly. We have just updated the report in our social media channels. So if you are not following our Twitter, Facebook, and LinkedIn, please do so. You can see the updates much earlier there. In terms of RPM, what we have is RPM International reported their fourth quarter May 2022 earnings of $1.42 per share on revenue of $2 billion, whereas the expectation was $1.44 per share on revenue of $2 billion. Revenue grew 13.7% on a year-on-year basis, and the company said it expects first quarter revenue of approximately $1.9 billion for the fiscal year 2023. The current expectation was revenue estimate of $1.86 billion for the quarter ending 31st of August 2022. The stock is currently more or less flat, down by 0.7%. In terms of the details, fourth quarter net income increased 27.4% to a record $199 million. Income before income tax was a record $221.7 million. Diluted earnings per share was a record $1.54, and adjusted diluted earnings per share was a record $1.42. Fourth quarter EBIT increased 17.1% to a record $251.7 million, and adjusted earnings before interest tax increased 11.7% to record $263.7 million. Fiscal year 2022 full year sales increased 9.8% to a record $6.7 billion. And fiscal 2022 full year net income was $491.5 million. Income before income taxes was $606.8 million. Diluted earnings per share was $3.79, and adjusted diluted earnings per share was $3.66. Fiscal 2023 first quarter outlook calls for sales growth in the mid-teens and adjusted earnings before interest and tax growth of 20 to 25%. So that's pretty good. RPM Chairman and CEO Frank C. Sullivan mentioned our nimble businesses quickly adapted to a dynamically shifting supply chain constraints, inflationary challenges, and foreign exchange headwinds to steadily generate momentum in the second half of fiscal 2022. Our associates' efforts culminated in a fourth quarter of consolidated record sales and record adjusted earnings before interest and tax. Okay, So let's go back to the market once again, and not much has changed since we saw. Nasdaq is down by 91 points, while it is awaiting on the big earnings reports this week of Apple, Amazon, and others. Dollar index is down by 0.1%, and Dow is completely flat, down by 4 points, which is very nominal. So from Friday, the market is really flat. The interesting thing is about S&P 500 and Nasdaq and other Dow as well. The DPO is above zero after a long time. The DPO is above zero, which is actually positive. Um, Currently, the index is above the 30 days weighted moving average as well, which is again positive. The index is again above the bearish trend line there. So all those are positive. But then you know, I seriously doubt there would be a significant, earnings report, positive earnings report. I mean, from most of the companies. So I'm not sure. Well, I'm not a you know big market predictor, but that's what I feel personally in terms of global macroeconomic factors. Things are not really very positive. They are positive. The world is adapting to the conditions, but still there are challenges which needs to be overcome. So let's see what happens. Okay, let's not speculate. More. We have already done some speculation there. Let's not speculate more. And in terms of the stocks, really, let's see how we are placed at. Advanced Auto Parts down by 0.7%. Apple is down by 0.9%. Accenture is down by 0.1%. ADI is down by 1.23%. Akamai Technologies are down by 1.93%. Most of the stocks, AMD, Amazon, they are down by more or less 1 percentage points. Well, it is. I would say the market is taking a breathe, it's just taking a pause from the somewhat good growth in the last week, in terms of like from expectation from the market in terms of earnings, and then of course settling down the monthly expiry. So there was strong positivity in the last week. Now they are taking a breather and waiting for the Fed update. I would say Fed Reserve update. Now let's go to some of the stocks that are making news. One of them is Newmont. Newmont, sorry, Newmont. Newmont Corporation is down by around 13% today after the company reported a very disappointing result. So let's have a quick look there in terms of their earnings report. So Newmont Mounting announced their second quarter 2022 earnings of 46 cents per share on a revenue of $3.1 billion, whereas the expectation was 60 cents per share. Revenue fell 0.2% compared to the same quarter a year ago. So that's pretty. It's a bad performance, and you can see from the stock chart for the last few months, it has been sliding drastically. So it has lost more than almost 50% from there. From April itself, from April onwards, it lost 50%. Right. Now, in terms of detail, um, in terms of The full year guidance at 330,000 attributable gold equivalent ounces, GEO from core products, an increase of more than 130,000 total gold equivalent ounces from first quarter. The company generated $1 billion cash from continuing operations and $514 million of free cash flow. Reported gold cost applicable to sales of $932 per ounce and all-in sustaining cost of 1,199 dollars per ounce. So gold price is currently $1,716 per ounce. And the cost here, they are saying cost applicable to sales is $932. But still, the company is not earning much. Okay. Let's see. Updated full year guidance for development capital spend to $1.1 billion. Provided trends on development capital cost and life timeline related to Tanami Expansion 2 and Ahafo North declared second quarter dividend of 55 cents per share as well. $1 billion share repurchase program to be used opportunistically into 2022 with $475 million remaining. Okay, let's move on to the next news update of World Wrestling Entertainment. And the stock is up by 7.5% ahead of the earnings report after Loop Capital upgraded the company and raised its price target based on greater likelihood that the company is solid with Vince McMahon stepping down. Okay. McMahon, WWE's top shareholder, is being investigated for sexual misconduct claims and stepped down as CEO on Friday. So that's ahead of the earnings news. So let's see what happens on the earnings report. So the stock is up by 7.5% today. JD.com. JD.com is up by 2% almost after Morgan Stanley named the company as a catalyst-driven idea. The Wall Street firm said it's particularly bullish on JD.com heading into earnings in August as revenue growth is expected to accelerate from June's level. Okay, I think, but there are other challenges in China, so let's see what's going to happen there. That's the problem with these companies. The Chinese regulations keep on constraining their ambitious growth. Ryanair is up by 4.4% after their earnings report. So quickly have a look at their earnings report. RY. Yeah, I get confused with their Ryanair reported their first quarter June 2022 earnings of 80 cents per share on revenue of $2.8 billion, whereas the expectation was 69 cents per share on revenue of $2.9 billion. Revenue grew 521% year-on-year basis, of course, in comparison to the previous year, which was really sluggish. So the company is positive there. Let's look at something else, maybe. Philips. No, not this one. Philips. The Dutch company. This one. Sorry, I'll come back to that. Lamb Research. LRCX. Yep, that's the one. LRCX, ahead of its earnings report, is down by 2% after Barclays downgraded the stock to equal weight, saying in a note to clients that despite a recent bounce, the semiconductor industry is due for correction. That's interesting. So that would be applicable to all the semiconductor stocks, AMD and Intel, and that's why probably they are down today. All the semiconductor stocks are down today. Diamondback Energy. Energy stocks surged on the back of rising oil prices. Oil price went up by 1.7%. Diamondback Energy is up by 6.3%. Marathon Oil is also up, and Valero and Hess also are up. So these are the energy stocks. Our energy stock was Enphase. Enphase is up by 2.6%. I was looking for that stock. Where did it go? Okay. And Travelers. The Travelers company is up by 1.8%. After Raymond James upgraded Travelers to a strong buy. Okay. Raymond James believes the insurance stock, which is up 2% this year, will continue to outperform Travelers companies. Okay, so that's more or less the news. Not much happening today. And in case you are looking for the Mega Millions jackpot lottery, it's now at $790 million. Yeah, that could be something to go for. Well, that's about it today. On Monday, we'll see you tomorrow again at 2:30. We'll see some of the earnings report tomorrow, but the main news that is going to happen is on Wednesday. So keep watching the watch list and follow our social media channels of Magenta Trade and subscribe to our YouTube channel, of course, please. Thanks a lot. I'll see you back tomorrow. Thank you.